I have a question.
Yeah.
Uh, and just listening to you, one of the things that you said that's always stuck with me is that getting a listing isn't always the thing you want to do, right? You want to find out if you even want it in the first place. But once you do decide you want that listing, getting that client to sign the listing. Do you have any tricks of the trade? We've got, I know that all of us have struggled with that at one time or another. I just wondered if you had any insights there. We've got this one client, he wants to do it. I mean, and we've given him the EXP listing agreement. You may have a different one that you use. It seems a little bit daunting. There's 7 pages of really small print, all smashed together in one document. And it seems to me that it would be a little bit daunting for some people to look at. Do you go through the listing with them? How do you do that? A lot of questions.
Yeah, so the representation agreement that I use, it comes from CAB, California Association of Business Brokers. There is a similar CAB rep agreement in the National Business Broker folder within EXP, and it is 3 pages, not 7. It's 3 pages, and it is yeah, it's still like 9-point print or something, so it's still relatively small print, but most of the terms of the representation are on the first page. And so you set out who the seller is and what kind of business entity they are, what the purchase or what the listing price is going to be, whether or not they're going to carry a note, the training period, all that information is on that first page. And then the second and third pages are just basically the legal jargon that says, you're gonna what the seller's agreeing to and what the broker's agreeing to. Okay, so in terms of getting a listing agreement, I mean, I think that my process, because I deal with the seller so much in advance, and because I want to do I want to analyze their financials, I have a lot of conversations, I send them out, different questionnaires and things to gather information about their business so that I can do a price analysis. I mean, by the time I have a discussion with them about the business value, it's like, here's what we think we can sell the business for. Is that something that makes sense to you? And if it is, then we've already had so many conversations and been working together for a period of time that it's like, okay, then I'm going to send you over the paperwork that authorizes me to go ahead and represent you in the business, and we'll move forward. It's just the next logical step. So I don't really have an issue typically getting a representation agreement signed. I put it together, send it to them through SkySlope, set up for DigiSign, along with a note that says, if you have any questions about it, then call me and we can go over it together. We'll discuss it. But I don't really even go through the rep agreement with them most of the time. I mean, they can read, they're adults, they're business people. I expect that they can read an agreement.
Yeah, so we're at that point with one client. We've done the valuation. We've come up with a selling price that they think is reasonable, and we're just waiting for them to sign. I think they will. It's just that SkySlope is a little, DigiSign's a little bit. Well, you have to fill out some blanks before you set it on there, right? I mean, it's
yeah, I fill everything out first and then upload it into DigiSign and then set it up for the signatures. And other than that, I have it all completed before I ever upload it there.
You have to in DigiSign, yeah, pretty much. I mean, there are places you can fill out, you can leave a blank there, they can fill it out if you want.
Right.
I'm going to look for that 3-pager because that has me intrigued, and I'm on SkySlope. Is it in SkySlope? What'd you say?
It is, and they called it engagement rep agreement or something like that. It's on page 3 of, so the National Business Broker folder. And then if you go to page 3, it says engagement, but I think engagement is abbreviated, not spelled out all the way, but it's engagement agreement or engagement rep agreement, something like that.
Okay.
Okay, but that essentially is knocked off from the CAB form. So it's the same, it's pretty much the same rep agreement that I use because I just always download them from CAB so that I have the current version.
The rep agreement, I think, is what you're talking about. It's
there's 2 rep agreements in there. One is similar to the CAB form, and I think, like I said, they call it engagement agreement or something engagement. The other one was knocked off from a franchise. And what I don't like about it, I always tell people not to use that because paragraph 28 or 38, unless they've changed it, talks about how EXP or how is something about franchises, and EXP is not a franchise, so it's not relevant. It's confusing and shouldn't be there. The whole paragraph needs to be removed because EXP commercial is not a franchise. And, you know, none of the EXP offices in the various states are franchises.
okay. I still haven't found it. I'll keep looking as we're in the meeting.
Hey, Tanya, can you hear
Yeah.
me? This is Danny.
Yeah, I can hear you.
Hey, good morning, everybody. So just to be clear, this National Business Broker folder is inside of SkySlope?
Yes.
Got it.
So if you go, I'm going to share my screen real
Beautiful.
quickly so you
Thank
can see it. Hang on a second. Let me pull up the right thing. Okay, share screen. Okay, so can you see if you go into working documents and office docs, there is this Business Broker National folder.
Mm-hmm.
Okay, and some of you guys will have, like mine, I have a California folder, which if you're not in California, you're not going to have that, but you would have a Utah folder instead, or a Washington folder or whatever. Okay, so in Business Broker National, let me see if I go just to page 3. This engagement rep agreement. This is almost identical to the CAB form because that's where it came from. Okay.
Okay.
And so this is essentially what I use, although I just download it from CAB. But you can see that the first page of this is all about, you know, what type of business is it? Is it a restaurant? You know, this is the name of the business and the address. The seller, let's say it's Jack's Bar and Grill, but it's owned by XYZ Corporation. Then your seller is going to be XYZ Corporation, and it's either a, you know, C Corp or an S Corp. The business up here would be Jack's Bar and Grill. Okay, so your seller is going to be your legal entity name. And if it's a sole proprietorship, then your seller is just going to be, you know, Jack Jones, whatever. So if your entity is here or your sole proprietor, whichever, your owner or your authorized signer and title is going to be, you know, Jack Jones, president, if it's a corporation, and then his home address, email. This phone is typically going to be his cell phone. For fax, I just put NA now because nobody has a fax machine or uses it anymore. broker information, and then the agent for broker, and you can see these DRE numbers. That's, you know, Department of Real Estate in California. Since this came from CAB, you know, there's still things in here that reference California in one way or another. Even here, separate real estate broker agreement attached, which is a non-CAB form. So if you do have real estate involved in the purchase, in the business purchase, you can indicate here whether, you know, there's a fee that's if you're selling the real estate, or if you have a separate real estate broker agreement, which is typically what you're going to do. You know, typically you'll have a separate real estate agreement, and that'll be an AIR form, AIR CRE. Okay, so let me close this for a minute. The other agreement that you used is probably this business broker exclusive listing agreement. And I think this is the one. Does this look like what you used? Yeah, okay. So the
Yes.
problem with this is, like I said, when you get down here to the bottom of this, oh, that's all definitions. Okay, franchise or not a party, paragraph 38. So EXP Commercial Business Brokers. First of all, EXP Commercial Business Brokers is not a name that even exists. There's no fictitious name statement filed to my knowledge anywhere about that references or that, you know, is for EXP Commercial Business Brokers. Secondly, even if there were, it's not an independently owned and operated franchise. And EXP Commercial Business Brokers Inc. also does not exist and is not a franchisor. So this whole agreement was knocked off from a franchise, probably Transworld, or yeah, I don't know which one. But somebody in some administrator, you know, back in the admin, they just gave it to somebody and said, here, everywhere where it says Transworld or whatever the franchise was, just put in EXP Commercial instead. But the problem is they never had an attorney or anybody with anybody higher up at the corporate level. They never had them review this for accuracy. And so using this agreement is, yeah, I just tell people don't use it because it's confusing, ambiguous. It's got names in here that don't exist, company names that don't exist, and it just shouldn't be used. And it needs to not be, you know, even this approved by EXP Commercial Business. There's no EXP Commercial Business, right?
Right.
So they need to just take this out.
It also defaults to a 10% commission on real estate, right? I think there's a
It may, I mean, and commissions are negotiable, at least in California.
but it's boilerplated on that one. So if you do use that form, you gotta definitely redline that or change it.
Yeah, right here, you've got in paragraph 6. So they've got it hard coded that you get that it's a 10% commission or $15,000 minimum. Well, I mean, my minimum is higher than that. And if a company looks or seems like it's going to be extremely difficult, I'm going to charge a higher fee than 10% too. So, you know, you always want to be able to, I mean, those are negotiable. They're supposed to be negotiable. You want to have the ability to change those. So, like I said, I mean, in general, use the engagement rep agreement. It's a better form. It still has a couple of references to CAB, but not in any way that can hurt you. And I don't believe I've ever seen anything in here that used EXP Commercial Business Brokers or any company name like that that doesn't actually exist. So
Let me ask you one more question, Tanya. On the right-hand side there, total listing price, and then you've got it broken down into all these line items.
yes.
Do you fill out all those line items in?
So the total, let's say the total listing price is $100,000. Okay, we're going to use easy round numbers. And let's say that, most of the time, let's say the seller says they're willing to carry a note of 10%. So your listing price would be 100,000, your down payment would be 90,000, and your balance of note to seller would be 10,000, because these three have to add up to your total listing price. So your down payment is all the money that is going to be paid at close of escrow. It's basically the money that is, all the money except your liabilities that are going to be assumed and your note to a seller. So different scenario, let's say the listing price is going to be $100,000, but of that, there's $20,000 on a piece of equipment that's a liability that needs to be assumed. So in that case, and let's say the seller's not going to carry anything. So now your listing price can be 100,000. Let me put these in here, right? Your down payment would be 80,000 and your liabilities to be assumed would be 20,000, because these two are going to add up to your 100. And if the seller was carrying a note, then let's say you've got a $10,000 note here. Well, now this is only going to be 70 instead of 80 on your down payment. Does that make sense?
The other field, put a number in, it won't accept NA in any of the other fields.
Yeah, it doesn't accept NA in these fields. Usually I leave them blank. So first off, let's look at the assets included in the listing price. On a small business transaction, there's almost never any cash. So I just leave that blank. Let's say you have inventory of 25,000 and let's say there's accounts receivable. If there is any, you can include that or not. Otherwise, you leave it blank. But, that's it. So if you have $25,000 of inventory that's included in the listing price, you just put the 25 there. That's it. Down up here, we said total liabilities to be assumed. So if we have $20,000 in liabilities to be assumed, then somewhere down here in the liabilities section, we should have $20,000, right? So let's say there's an equipment capital lease of 20,000 there, and that's what's being assumed, right?
So these numbers always are going to be changing, right? The accounts receivable, the inventory, everything's going to be changing as a business takes time to close. So typically, how does that flesh out at the end of the day when they buy the business?
So this is just your rep agreement. This is between you and the seller, and the buyer never sees this. And so basically, what you're trying to establish here is inventory included in the purchase price, or is it going to be in addition to the purchase price? Are there any liabilities that are going to need to be assumed? I can tell you, there's almost never. I think, my liabilities, I use this section maybe once every 3 to 5 years. The inventory typically will be included in the purchase price. On occasion, it'll be added to it. So, but what I want to do with the seller is say, hey, what's the value of your inventory? And if they tell me 25,000, I'm like, okay, is that a typical? Is that pretty much an average number? Or do you have more inventory than normal right now? Or are you understocked right now? Overstocked, understocked? And let them tell me. And I say, okay, so for this 100,000 that we're asking on the asking price, you're going to include 25,000 of inventory in the purchase. Is that correct? So you're just establishing what the purchase is going to consist of. And then obviously the buyer, when they draft up a purchase agreement, they're going to ask for whatever it is that they want. But if you market the business that the asking price is 100,000 and that includes 25,000 of inventory, Then when your buyer writes an offer, that's what they're going to want. They're going to say, well, I want that 25,000 of inventory is supposed to be included in that asking price. So that's how they're going to draft the purchase agreement. Does that make sense?
Yep. So your equipment, the furniture, the various fixtures and so forth, that goes in there someplace?
No,
Okay. So
no, because your furniture, fixtures, and equipment is always included as part of the sale.
that's kind of the blue sky sort of thing, I guess.
It's what's necessary. So think of a manufacturing shop. So your businesses are typically valued based on cash flow, right? I mean, you're gonna calculate your seller's discretionary earnings, and you have some tangible assets, but your goodwill, it really comes from your cash flow. Well, that cash flow, if you think about a manufacturing shop, they can't create that cash flow if they don't have CNC machines and things that are doing that manufacturing. So it's already accounted for in the cash flow. Furniture, fixtures, and equipment, the company can't operate without that equipment.
But someplace along the line, they're going to want to know what those are, right? I mean, the buyers are going to say, well, how many welders do I get? How many TIG welders do I get for the welding shop, right?
Yeah. Yeah. And so that's part of, you always want to have the seller give you a list of the furniture, fixtures, and equipment. You need it for two things. Sometimes you put that in your marketing materials or in the SIM, a confidential information memorandum. Sometimes you don't put it in there, but certainly when you have somebody who's serious about drafting an offer, then you want to make sure that they have a list of that furniture, fixtures, and equipment. The second way it comes into play is, at least here in California, they attach that list of FF&E to the bill of sale. Escrow attaches that to the bill of sale at closing. And that list of FF&E also has to be sent to CDTFA, which is California Department of Tax and Fees, or something like that. So in order to get a release, a sales tax release, in order for the buyer to avoid successor liability on unpaid sales taxes. So the list of FF&E is important. And you can do that. I mean, I think that when I send out a list of the documents that I want for the business evaluation or the business price analysis, one of the things I ask for is a list of FF&E. The truth of the matter is that list of FF&E typically is found in the depreciation schedule on the tax return, or at least the bigger components, not all, but the bigger components.
Hey, Tanya, are those other forms or things that you send out to your clients, are they in this folder as well, or that's something that you have that you do for your own personal?
This folder is just EXP folder. I think the email that I send out, let me go to email here and pull up a template. So let me see, business price analysis. So I have a template that I've sent out to, I think I've sent it out to all the people that are in my apprentice group, unless they're new. And then I might not have yet. But basically, and I think, Dick, I had sent this out to you before. I think you had requested it, right?
Can you even see me? My computer's locked up. Can you hear me?
I can hear you fine. Yeah.
Yeah, my computer's totally locked up, so I can't, there's no activity. I can just hear your voice. So.
Okay. All right. Well, so this is just a basic email template that I put together that I send out when, to somebody I've had a conversation with, a business owner. And it's just, hey, it's a pleasure speaking with you, having an opportunity to learn a little bit about your business. Per our discussion, here's a list of the documents we typically use when conducting a business price analysis. So I want the last 3 years of tax returns, profit and loss statements, balance sheets, the interim P&L and balance sheet, expenses by vendor summary for the last 12 months. If it's a larger company, I like to get that because there's another company I can refer them to that oftentimes can cut out some of these expenses for them. If it's a smaller company, then I usually just delete that bullet point. I mean, literally, they would need to have an expense for one vendor that was over 100,000 in order, for this company to be able to help them. Okay, a list of FF&E and machinery, including the business, if any, long-term contracts, if any, list of vehicles. So again, these, this is the template. And what I do is, depending on the type of business, if it's a restaurant, they might have a delivery vehicle. Usually I've asked them while I have them on the phone if they have any delivery vehicles or vehicles that would be included in the sale. So I usually, if I know there's no vehicles included in the sale, I'm going to delete that bullet point instead of sending it to them. Long-term contracts, that's going to come into play with manufacturing companies that might have long-term contracts with Boeing or with the government to manufacture certain products. If it's not manufacturing, or if there's no reason to believe that they would have any long-term contracts, then I'll delete that bullet point. So, I try and tailor it a little bit based on the conversation I've had. And, if they've already told me they don't have long-term contracts, they don't have vehicles, then I don't want to keep these in here, because then it makes it look more like a form and less like, I was actually listening to them, right? So that's a template. So anybody who wants that, just shoot me an email and I'll reply back to it. And, I'm happy to send this out to you. There's nothing overly proprietary about it. It's the same. I mean, we have to request the same stuff over and over and over again. And so that's one thing that I like about Pipedrive is you can create email templates very quickly and very easily. And you can edit them quickly and easily too, which is nice. All right. So any questions on that?
No, that was good. Thank you.
Okay. All right.